In 2005, while Wall Street was throwing parties, one weird doctor with a glass eye was betting everything that America was about to collapse. Michael Burry wasn't a banker. He was a neurologist who taught himself finance by reading books in his spare time. And he discovered something terrifying. The housing market wasn't growing because homes were valuable. It was growing because banks were giving mortgages to literally anyone with a pulse. These weren't normal loans. They were called subprime mortgages, loans given to people who couldn't afford them, with interest rates that would explode after 2 years. But here's the insane part. Wall Street took these toxic loans, bundled thousands of them together, and sold them as AAA-rated safe investments. Burry read through the actual mortgage documents. He saw people with no income, no job, and no assets getting $700,000 loans. He realized the entire financial system was built on a lie. And when those adjustable rates kicked in, millions of people would default at once. So Burry did something that had never been done before. He asked banks to create a financial instrument that would let him bet against the housing market. The banks laughed at him. They thought he was insane, so they happily sold him what he wanted: credit default swaps, essentially insurance policies that pay out when mortgages fail. Burry invested everything, $1.3 billion of his investors' money, and then he waited. But the housing market kept going up. His investors panicked. They called him crazy. They demanded their money back. Burry was losing millions every month in premiums, and everyone thought he'd destroyed their fortunes. He even locked his investors in. They legally couldn't withdraw. Burry was so certain he was right, he refused to let them escape their own profits. Then, in early 2007, it started. Mortgage defaults began spiking. The adjustable rates kicked in, and families couldn't pay. The dominoes were falling, but Wall Street still didn't see it. The big banks, Bear Stearns, Lehman Brothers, Merrill Lynch, they were still holding billions in toxic mortgages, insisting everything was fine. By summer 2007, the subprime market collapsed. Bear Stearns hedge funds went bankrupt, and Burry's bet started printing money. But the real crash was still months away. September 15, 2008. Lehman Brothers, a 158-year-old institution with $600 billion in assets, filed for bankruptcy. It was the largest bankruptcy in American history. The entire global financial system froze. Banks stopped lending. The stock market crashed. AIG, Merrill Lynch, Washington Mutual, all gone. 9 million Americans lost their jobs. Burry's fund made 489% returns. He personally made $100 million. He was right about everything. But here's the twist. No one called him a hero. The public hated him. The media called him a vulture who profited from America's suffering. His investors sued him. The FBI investigated him for years. Meanwhile, the bankers who caused the crash, they got bailed out. $700 billion of taxpayer money saved them. Not a single major executive went to jail. Burry closed his fund in 2008. He was burned out, vilified, and exhausted. He'd been proven right, but it destroyed him mentally. But the story doesn't end there, because Burry saw something else coming. In 2019, he started warning about another bubble, this time in passive investing and index funds. Then COVID hit in 2020. The market crashed 34% in weeks, and once again, Burry was positioned perfectly. His fund made over 200% returns while everyone else panicked. He also bet big on GameStop before the Reddit army. He bought in at $4 per share in 2019. During the squeeze in 2021, it hit $483. He made millions. Again. Today, Burry is warning about inflation, commercial real estate collapse, and an AI bubble. And history says, maybe we should listen this time. So what made Michael Burry different? He wasn't smarter than everyone on Wall Street. He just did something they refused to do. He read the fine print. Wall Street had every incentive to ignore the truth. They were making billions in fees. Burry had every incentive to find it, because he was betting his career on being right. The lesson isn't that markets are rigged, it's that crowds are blind. When everyone believes the same thing, the person who questions it has all the power. Burry didn't crash the economy. He just refused to pretend it wasn't already broken. And that's what made him dangerous. He told the truth when lying was more profitable. Michael Burry saw the 2008 crash, he saw COVID, he saw GameStop. The question is, what's he seeing now that we're all missing?